The International Monetary Fund just announced that it projects the global economy to grow by its slowest pace since the 2008 financial crisis. And the United States is among the economies that are expected to slow even further. Here to break it all down for us from our D.C. bureau this morning is Yahoo Finance's Brian Chung. So, Brian, you dug a little deeper into this report. What does the IMF have to say?
Good morning, Alexis. Very gloomy forecast from the International Monetary Fund on global growth around the world for 2019, saying that they expect the globe to slow to its slowest pace since the financial crisis, saying that the expectation for global growth as measured by GDP would be around 3% for 2019. That is compared to 3.2%, so a slight notch down from its last forecast. That was in July. The reason why they had to make that revision downwards is because of trade standoffs and also rising geopolitical tensions. The IMF saying that they do expect a bounce back, however, from emerging economies to lift global growth in 2020, although they say the United States, Japan, China, these kind of areas of worry should be continued to expect to slow through 2020, saying, quote, a synchronized slowdown is happening around the world, and they say that this is exacerbated by trade tensions between the two largest economies, that's the United States and China, of course, as negotiations continue between those two countries on a possible phase one deal. The estimates from the IMF are that the trade deal negotiations between the U.S. and China are actually dragging down on global growth by about 0.8% in terms of GDP growth through 2020. And the IMF, as the map just showed you, showing actually sub 1% growth in many corners of the world, including Germany, Japan, Brazil, Mexico, Russia, Saudi Arabia. So a pretty gloomy forecast from the IMF. Something notable from the chief economist at Gita, Gopinath. She said, quote, if growth were to deteriorate more severely, an internationally coordinated fiscal response tailored to country circumstances may be required, saying that monetary policy and easing rates by central banks across the world might not be enough. As far as what the IMF thinks, we'll have an interview with Gita, Gopinath later on the final round right here on Yahoo Finance.
And Brian, I think that the key headline here is that a synchronized global slowdown. What is that precisely? So because of the trade war conditions, growth across the globe essentially slows in unison?
That's exactly what it is. And the IMF saying that specifically there are advanced economies in Asia like Hong Kong, Korea, Singapore, that they've all actually downgraded across the board because of their exposure to the Chinese slowdown, but then also because of any sort of headwinds from the U.S. China trade negotiations. That is a direct kind of quote from the report itself. So it's not just the trade effects on the U.S. and China in a vacuum. This is affecting many corners of the advanced economies world as well. So the IMF saying, look, we've had to bring down our estimates for global growth because of the rising tension, among a list of other things too. They did cite some more structural issues like slower productivity or an aging workforce, but saying for right now, the trade story really does remain a big overloom over the global economy.